Hello and welcome to Laguna Capital's segment on credit, the basics of credit. What is a credit score? A credit score is a number ranging between 300 to 850 that depicts a customer's credit worthiness. The higher the score, the better a borrower looks to potentially lend. A credit score is based on credit history, number of open accounts, total levels of debt, repayment history, and other factors. Lenders use credit scores to evaluate the probability that an individual will repay the loans in a timely manner. This is brought to you by Investopedia, this definition. Credit grade card. So, what is the credit grade card? So, the grade card or the report. The grade categories are as follows: the amount of accounts, the type of debt, the debt amount, the payment history, and new credit, the length of the credit times as well. Now I'm going to go into the next section of credit and what each one of these means. So, score ratings. Your payment history makes up about roughly 40% of the score. It's the majority. How you're paying everything off, and are you paying it off on time? What is your history with lendable money? Your payment history. Your debt amount. 33% of your score or less. Use 30%. That's what we always say, but ideally you want to use 20% or less. So what does this mean? If your credit limit is $1,000, ideally you should use only $200 on that card. Spend only $200 on that. Or maybe you're okay and you want to go to 30% or $300 on that card. Next is your length. The length of your cards. The longer the better. If you've had one account open for 15 years, that's amazing, opposed to some that are open just for a few months or whatever the situation may be. That will be roughly 15% of your score. Next, I want to look into credit card churning. What is one way that you can make a ton of money while being smart, increasing your credit score, and just being aware of the situations that are at hold that Laguna Capital offers you now that you're a member. We give you the monthly reports. So, now that you filled out all of your budgeting, you can look at your expenses and see what you pay. Maximize your expenses. So, what do I mean by that? Well, what I mean by that is maximize your expenses. If you're paying $1,000 a month, the typical credit card offers that are out there say, open this account and if you spend $3,000 in 3 months, you'll get X amount back, sometimes ranging anywhere between $200 to $500. Well, if your monthly expenses are $1,000, you can now make $200 to $500, or depending on whatever the offer is that's out there. Maximize your expenses. Instead of swiping your debit card, maximize your expenses. Put it on the credit card. Yes, that's going to go into, a rough spot when we're talking about your debt amount using your credit limit, but sometimes the monetary value is a little bit worth it to ding your credit score just slightly, but you pay it off. As long as you pay it off, your credit score will increase. Your debt worthiness will increase. People like to see that kind of stuff. Sure, if you borrowed $1,000 from them and maxed out your limit, but paid it back all within the next month, congratulations. That's going to benefit you in the long run. In the short run, it may not. It's all dependent on how you want to go about building your credit. Some cards offer 1%, 3%, 5% cash back or points back on certain purchases. And when you're churning these cards, what you really need to understand is you need to say, hey, maybe I'll get the Amazon store card. Every time you purchase with that card on Amazon, think of it as another 5% off. That's a steal of a deal. If you got 5% off on the original value because it was on sale, you just got 10% off now. Congratulations. And when your credit card churning and you're churning these cards, just using them for the promotions or the value, you should always close the cards that are opened for churning purposes. Close those cards. Call that company back up in a few months and say, hey, I would like to close my card. I don't need this anymore, and move on from there, because the more cards you have open could affect your credit score. But always remember to keep the first card you ever had. Keep that one open, because the longer you have that card, the better the situation could be. And understand that credit card churning could lower your credit score in the short term, but it grows it in the long term. So check out our credit card page, sign up for one of our one-on-one courses or one-on-one individual sessions so that we can find the best offers for you, and depending on your spending habits and things like that. So we'll have a credit card page available on the website that you can look at, and money-making opportunities that come about. We'll update you monthly on what offers are going by the financial institutions that are out there. Maybe it's opening new bank accounts or new credit cards that are out there. We want to help you. So maximize your expenses, and let's get the ball rolling with credit card churning. So what is your FICO score? What even is FICO? FICO was based off of the Fair Isaac Corporation and is most commonly used as the credit scoring system. How do I increase my score? You're able to increase the score by the following factors that we spoke of earlier, as well as random miscellaneous credit utilization processes. Maybe you dropped your social security down on a rental application and they report you to the big firms. Maybe it's credit card and credit card churnings, and using your credit, aka borrowing money, correctly. Maybe you go get loans for $1,000 that you already have the money sitting aside in a bank, but you want to increase your credit, so you pay those loans off. They offer a 1 year, you just give them $100 a month until it's paid off, and you pay it off even earlier. Any system that requires a credit check typically will report back to the credit organizations. So this is your FICO credit score. It takes a lot of work to get in that excellent range. Most individuals come in around 700 to 750, some dipping between 650 to 700 as just fair credit. Others that let those credit cards get the best of them, overspend, are not conscious of what they're doing, end up in very bad credit sections. So, as always, when you drop below a 600, or when you're in the range of a 600 credit score, you should stop everything and try to figure out how to grow that credit score back up, because you want a new place to live in, you want a new credit card, you want whatever the situation is, you're really going to need to boost your credit score back up. Most people do not like to see anything below 700, but sometimes your credit will maintain itself around 650 to 700, depending, 680 and things like that. So really work on building up your credit score. Why? Because once you have credit, you have many other opportunities that can arise depending on whatever situation that you're in. So, as I talked about earlier, the corporations, the agencies, the institutions, what are those? There are three main institutions that exist, and those are Equifax, Experian, and TransUnion. The reports are free, but you must request them. Keep in mind that only once every 12 months you can request it, so that means 3 per year. And these are the big reports, the full in-depth reports. So what we recommend is once every 4 months. Call them up, go on their website, and request your Equifax. 4 months later, request your Experian. 4 months later, request your TransUnion. Look at that, analyze it, try to figure out, how can I best move forward with all of this, and let's make some things happen. And sometimes you should also look at trying to see the reports as well. Maybe somebody else stole your credit numbers, or somebody's using a credit card, or something was filed incorrectly. Whatever that situation is, you should really try to figure out that and report it to the credit industries. Next, when you run out of those three, most companies will pull soft pulls with banks. You're able to go on your Wells Fargo or your Chase app and look at your credit journey or your Fico score. Sometimes you can go on Credit Karma or Credit, but it's not a full report. Those are called soft pulls, just kind of polling, skimming what's on the top and giving you a generalized number. But if you want the true details that are used for a hard inquiry, like on a car, on a mortgage, things like that, you'll need to use your Equifax, Experian, and TransUnion accounts, because that's going to give you the full breakdown and truly where you stand with your credit history. Things to keep in mind. Utilizing your credit and keeping it should be done in a great mindset. Benefits are 1 to 5% off interest charges in the future and more. The more that you grow that score, guess what? You can now save a whole lot more on a house mortgage, on a car payment, on whatever the situation is. Credit really helps with interest charges. Now, if you find yourself in a bad path and you have to go down because all of a sudden you have 10 cards open at $2,000 a piece, and you're maxed out on all of them, getting interest charges that are just outrageous by these companies, which banks love to do. They love to pull you in and you just fall into these horrible traps. Work with the lenders, work with the banks that offered you those cards. Rip those cards up and never use them again. Just go cut them. It's pointless. At this point, you're already almost $20,000 in debt. Maybe your labor job is bringing in $25,000 in debt, or in income. Well, it's going to take you a whole year alone just to pay those cards off, if you can even do that with the interest that's going to be accruing on all of those. And last resort is go with bankruptcy, but try debt consolidation or grace periods. Like I said, work with the lenders, work with the people who issued you those cards. Try to figure out how you can work with them and how they can work with you. Some of them during the COVID pandemic said, hey, we're willing to do XYZ and not take your minimum payments for 3 months. Others said, hey, here's an entire year of credit of 0 or 1% interest if we close your accounts and you promise us that you'll pay those back. Just think about it, because those are things that you should be keeping in mind and able for you to move forward and understand, hey, credit is one of the most important things to move forward in life. Otherwise, if you don't believe in the credit system, then you should have a lot of cash on hand, because it's going to take you a long time to get that mortgage or to get the amount of capital needed and required. And even banks will require these credit scores in order for you to move forward. You want a new car, whatever your situation is. And if you're on top of it, if you're in that great mindset, really financing could be to a huge benefit for yourself. So work on getting your credit score up in whatever ways it can be. And as always, consult one of us. We'll help you along your journey to credit worthiness and financial freedom. Thank you.